Hey, thanks for joining us today. Kevin's talking real estate. I've got one of my good buddies in the industry, Ryan Pupero with US Bank. He's a top lender. He does a fabulous job. I've been working with Ryan for well over 10 years now, and they've got this down to a science over at US Bank. So, Ryan, why don't you give us a little bit about yourself?
Yeah, so I've been serving Orange County as a mortgage loan officer for a little over 18 years now, and
You're only 22.
Yeah, I wish I was. Came in here at 22, walking out feeling like I'm 62. But been primarily focusing on the purchase style business. A lot of individuals work on a lot of refinance opportunities, which is great. But I'm primarily focused on purchase transactions.
You do the refis though too?
Absolutely,
right
absolutely. But I do get a little bit more out of serving folks in a purchase transaction. It's nice to be able to help the process of handing over some keys. But been doing this 18 years. I say it's my hobby, my passion, and it's my profession as well. So,
well, you do a great job, and I appreciate you coming today to talk a little bit about the mortgage business. What I'd like to talk about today, the topic is the loan industry. What's it like in February 2020? 2020 vision now. So what we're doing, and talk a little bit about how it was when we had the market crash, but just a basic update of what we're doing. But that I can just look at all that market that we were going through with all the bank repos and short sells, and what a nightmare that was.
Yeah, I think after the crisis, we were back to doing 100% full documentation loans. And if those who aren't familiar, we had a product that was a stated income loan, which was essentially just state how much you made on the application.
The Ninja. No assets, no job. I mean, it was fabulous.
Yeah, well, it worked for a little bit, but I think the foundation wasn't there to keep the ball rolling. But
I think it's a really good thing, though, that what's happened is it's important that if you're going to take out a loan, you can pay it back, and you're capable of paying it back without having to sell your children.
Yeah,
that's probably a good thing.
Yeah, I think the biggest thing we tried to establish was the ability to repay, and that was primarily through showing what you earn on a W-2, a 1040, your whole tax return is now reviewed. Where back in 2008, you could just state I make $8,000 a month and received a loan. Some of the lending standards have loosened up a touch, but we almost had to relearn how to lend, I feel, starting in 2008, 9, and 10. We worked through a lot of the new regulation changes. I think TRID was, passed, in 2015, October was the loan estimate and the CD waiting period. I feel like we've kind of worked through a lot of that, and the banks really are very comfortable lending again, and we have fantastic rates currently. So I think that there's an amazing foundation with folks proving that they could afford the loan. They have put a down payment, so they have what I like to say, skin in the game.
Right.
And
let's talk through that process a little bit and go through it kind of step by step, so everyone can really kind of get a feel, because I still see a lot of people that come to my open houses that say that they haven't even gotten pre-approved to buy a house. Well, why are you out looking if you don't know what you're going to
Yeah, absolutely.
And if you can't figure that out, then it's going to be a real problem with your all of a sudden thinking, I want to buy that property, but you haven't been pre-approved. So I think it's important that we kind of walk through that, and people kind of look at me a little bit crazy sometimes when I say it's a full doc.
Yeah.
And they don't quite understand that. So the very first thing is, so I get somebody that comes to an open house, or I get somebody that calls me, and they're looking to buy a property. And what we need to do is get them pre-approved.
Yeah.
And a pre-approval is critical, because that tells us what they can afford to buy. You don't want to be looking at $1.5 million house and you can afford $500,000. It's a big difference.
Absolutely.
It's disappointing for the buyer. They in turn get disgruntled and unhappy. It's important to set expectations. So I get somebody in at an open house. I will in turn send an email, give Ryan a call, and cross that email with the potential borrower, and I hand that off to you to start a pre-approval process. Let's go through a little bit.
Yeah, we absolutely analyze the credit report. That's one of the first and foremost things we do, looking at the depth, the trade lines, obviously the score, We look
And
at
the score of a FICO score that they're looking, because there's different credit scores. We're looking at a loan for a property, which is basically, you can have lows and you're really bad if you're under 500,000, and the top you're going to see is about 8.5, 850. Is that higher, or 840?
Yeah, so in a conventional mortgage, the top credit tier is going to be 740. So if you have a 740 or an 800, you're absolutely tier one. So the one thing that I would say is it is important to speak to a loan officer, because some folks really undercut themselves and think that A, they can't qualify, or B,
Right.
they can't afford it. Or some folks will, do some online education, which is great. It's great to get a good handle on, what's involved in a mortgage. But some of my clients I found were using numbers that were completely irrelevant to today's market, shopping and making payment calculations on rates that were maybe a year ago.
Right.
Because today's rate, the average going rate as of early February, Fannie Mae reported, was a 3.45%.
Which is phenomenal. I mean, the
Fantastic.
best rates that we've had in the last 10 years, the lowest was 2013.
Yeah.
And we saw those at as low as a 30-year fixed, 3.25, 3.375. And now we're at just under, about 3.5%, just under that. So that gets us to almost the best rate that we've seen in forever. Because if we go back traditionally and look at 30-year fixed loans, we saw rates, back in the, 79, 80 that were up to 21%.
Yeah, incredible. Double digits were a real thing. And I think that if you tell, millennial, most of the new home buyers,
Right.
that you could borrow at in the teens, they'd think you're telling tall tale.
Well, I had one of those, so I understand where the rate was. But today is a big difference, and it wasn't so wacko, because pricing of homes in a lot of cases were back in the 79, 80 were under $100,000. So a rate that was that different was up to 20%. Didn't look as bad, but when you start adding hundreds of thousands of dollars, and we start looking at the median price in Irvine over $1 million, $1.3 million, that's a big difference.
Yeah, well, even if you look at the summer of 18, we were looking at rates in the mid to high fours in a 30-year
up to
fix.
5,
Yeah. So you're talking about a 12% decrease in a housing payment. And I think if you compare rents from the summer of 18, they definitely didn't go down, did they, in Irvine?
No, rents have gone steadily up through this whole process from 2007, 8, all the way up to now. They've gone up considerably. Continue to do that. So.
Yeah.
So tell me a little bit more. So when they in turn contact you, what are you going to have them do?
Yeah, so again, we review credit. We look at their income. That's, the W-2, the pay stubs, the bank statements. We look at retirement. We have to not only show that we have a down payment for the property, but we do have money in reserve. We call it PITI, principal, interest, taxes, insurance, and obviously HOA for a lot of the properties that have that. So we would want to show at least, on a conventional loan, you don't necessarily need, reserves, but typically at least 2 months reserves. Jumbo financing, anywhere from 6 to 12 months is pretty typical. So I think, again, the thing to go back to is don't think you're under or overqualified. Really, do some shopping with a great lender and talk to a few and get an idea of where the rates are, where the payments are on your dream home, because it could be a little more out of reach than you think, or a lot easier than
So
you
in
think.
today's market right now, for every $100,000 borrowed, it's just payments can be just under $400 for every $100,000.
Yeah, I think if you borrowed about 3.5, just off the top of my head, I think it's about 445 or 460. I could whip that out on a calculator if you'd like to confirm, but I think that's pretty
all right.
ballpark.
That's close. So when you're in turn talking to these folks, this is going to take, how many months to get this done?
Pre-approval?
Yeah.
I try to do it same day or next day.
Oh.
It depends on the service level. We
That time's been cut down.
well, we try to. I mean, obviously, we have to, manage, service level agreements with our real estate partners and make sure that we're, getting these pre-approvals out in a timely manner. But we also want to take the time to make sure we don't overlook anything, because we want to do a lot of the work up front. Because I always say, get a proper pre-approval done up front, because it's stressful enough being in escrow, because it can be
it's easy to get it to escrow. It's difficult to get it closed, and one of the processes that's the biggest problem is the loan pre-approval.
Yeah.
and the loan approval after the fact. So when you're in turn doing that, now you're talking about having this turnaround in 2 to 3 days. And actually, I know you've done many of them for me in a couple hours.
Yeah.
So the important part of it is to make sure you are giving you the information you need. And there's a whole process that you do. You got a great team behind you also that helps you get all this stuff done. You're out
Absolutely.
there hustling this thing up.
Yeah.
How many people you have in your team?
Yeah, so the one thing is obviously we're taking time to make this video and what's happening to the folks that we're currently working on. I do have a team of 4, and some of the people I've been working with as long as 2012. So as long as 8 years, and it's a family, and it's we all work together.
They do a fabulous job because there's so much backup and stuff that happens in there. So
absolutely.
So basically, a full doc loan includes your tax returns for 2 years, and then all the rest of your bank statements and all that kind of stuff. So it really is not overly complex, but you have to be able to get this information. And people kind of look at me cross-eyed sometimes when I say it's a full doc loan, and that you need to provide these things. This is the market. That's just what you have to have. And I think it's a positive thing.
Yeah.
And as we were speaking to a little bit earlier, once we get into escrow, we want to get these properties closed. We want to get these properties and the people into the home. So you have to have the loan completed. So when we're going through the loan process, we in turn, one of the contingencies we have in the loan for the contract is a loan approval. We get the appraisal, we get the loan approval. Any hiccups that you see in there that are ongoing? I know we end up having conditions to get that done, but anything of any consequence that people could be doing a better job of?
I think that if there's anything major pertaining to your finances, you need to be upfront and just say, hey, look, I did have a BK. We typically find it on the back of their credit report, but there are things that come up that seem to be somewhat hidden. So I think just in any relationship, establishing a really good line of communication is most important. But the contract defaults to 21 days for a loan approval, unless otherwise specified in the contract.
And I always cut it. When I get when I have a listing, I don't go 21 days. I cut it down to 15.
Yeah.
Do usually the appraisal 10 days. Once we get someone into contract, once we get someone into escrow, we want to get this thing closed.
Yeah.
And if we put these timeframes out there, everyone will work to those timeframes. If it's 21 days, they'll use day 21 to get all the final docs. If we do 15, they use 15.
Yeah.
So it's just a matter of trying to get people to work with us a little bit better on that. So, hey, I appreciate you coming in today, Ryan.
Absolutely.
We'll talk about some other topics later, but I appreciate you coming in again. Ryan Pupero with U.S. Bank. I'll have some additional information in the show notes. If you could drop me a line if you have any other questions, let me know. I appreciate you coming and joining us today.
Thanks, Kevin.